Finding Profitable Trades in Manic Markets. First of all, I love that title. My name is Don Kaufman, co-founder here of TheoTrade. Manic is the only way I think to describe these markets. You know, we are literally, we're one tweet away, people, from being up literally 120 points in the S&Ps or down 120 points in the S&Ps. If you don't believe that, just look back at the last 2 to 3 weeks of trade, because that's precisely what we have seen. Next is risk disclosure. We're not financial advisors nor a broker-dealer here at TheoTrade. I say this because, well, the previous portion of my career, I was a financial advisor and a broker-dealer. So tonight, apparently there's no soliciting, no recording, no photography, and do not feed the monkeys. Copyright disclaimer, this is ours, this is not yours. But one of the reasons I really like to throw this up here, listen, tonight we go at a pretty good clip. If you ever need to get a hold of us after this evening, as I said, we are based right here in Scottsdale, Arizona. A little background on me. I spent my time in Chicago and I am done. So we actually opened up here in Scottsdale, Arizona. If you ever need to get a hold of us after night, we use a joint inbox, just support@theotrade.com. And if you need to get a hold of me specifically, just put in the title, I need to talk to Don, and the email will magically appear in my inbox. So do not have any fear whatsoever of that. All right, so let's continue on. A little bit about me. For those of you, maybe you're brand new. By the way, who here is brand new, never been to a TheoTrade presentation before? If you've never been to a TheoTrade presentation before, you're in store for, well, something unique. But a little background on me. So I started trading in the late 90s. A little short time after I started trading, I was invited into a startup brokerage firm. That startup brokerage firm was called Thinkorswim. I was with Thinkorswim pretty much since the inception, all the way to the point where I ran education. I actually built their entire education division there. I ran education until 2009. In 2009, TD Ameritrade acquired us and went on to run education for over 7 million clients, which, you know, gives us some incredible insights during that time frame. Prior to Thinkorswim and TD Ameritrade, I actually worked for a trading firm for a few years before they actually picked me up. So yeah, I'm pretty familiar with TD Ameritrade, fairly familiar with Thinkorswim. So I left TD Ameritrade in 2015. It's this is my fourth year out, and we left. And I say we left TD Ameritrade ultimately to launch TheoTrade. So this is a little bit of a tour of CNBC over the years. We've been on this a number of times. By the way, Kevin O'Leary couldn't be like a nicer guy. I know I'm ruining it for you. Could not be a nicer guy. This particular, appearance on CNBC, it's memorable because they had bumped Kevin O'Leary and myself to a later time. So the two of us actually got to sit there and discuss things for about 30 minutes before the actual clip came out. A little bit about TheoTrade. We specialize in education of stocks, options, and futures. Okay, everybody here at TheoTrade, first of all, we're founded by professional traders, trading educators. Okay, everybody here has a minimum of 15 years of experience, a couple of us with a few decades, and we're here to help you mitigate risks in the market. That's first and foremost. I mean, the first thing you got to think about in this business, preserve capital. While learning a skill set, it's going to take you, again, through a lifetime. And it like literally learning to mitigate risks has to be first and foremost. The other thing I always like to do here is I like to introduce people to TheoTrade instructors. TheoTrade, we're not what I term a one-trick pony. There's not one instructor here. We have seven full-time instructors. Again, everybody has a minimum of 15 years of experience. When I say a few of us left TD Ameritrade, first of all, the infamous Professor Bierman. We call Jeff Bierman the Professor Bierman because he's a professor. He's a professor at Loyola and actually moonlights at Loyola, but he is, again, full-time with us here at TheoTrade. He's an analyst, and he's also the former chief market technician for TD Ameritrade. If you've ever traded on the Thinkorswim platform, Jeff Bierman's responsible for the vast amount of the studies on the platform. Next, Matt Williamson, that's our market neutral premium selling option strategist. We have Corey Rosenblum, senior strategist and swing trader. Brandon Chapman. Brandon also worked with us at TD Ameritrade. Brandon actually helped write a lot of the course material and education material for TD Ameritrade's education group, which, by the way, was the largest education group in the entire world when Brandon, myself, Jeff all work there. Specialty is macroeconomics, technicals, and fundamentals. Steve, Slim Miller, 43-year veteran. Steve actually was there when they first opened the Chicago Board Options Exchange. Last but definitely not least, we have an intraday future strategist, Tony Rago. So that's our team here at TheoTrade. What you're going to learn in this presentation. First thing, we're going to find strategies that have just become the bread and butter. Listen, people always ask me this question, and I'm going to hit it right up front. They always ask me, well, what strategy do you use the most? What I'm going to talk about tonight is unequivocally, okay, the most important strategy in terms of what I do. Like the bulk of my capital right now is geared towards the strategy that we're going to talk about tonight. We're going to see somewhat of the largest market opportunities exist and what strategies you can use to harness these trade ideas, why markets remain volatile for years. The markets are going to remain volatile for years, and you're going to capitalize on the opportunity. Discover how to build trades with limited risk, but maximizing returns. We're also going to talk about shorting markets. It's all right. You can short markets, individual stocks, and you could do it inside of a retirement account. A lot of people miss that. You can short in a retirement account. I'll show you how to do that tonight. We're also going to discuss in extent generating weekly returns while offsetting your portfolio's risk. So I'll also even take you through some real trade examples tonight. If that's all right with everybody. I'll actually even show you my portfolio. Ready? Because here we go. First thing we're going to show, that's the 10-year interest rates. They're back down to 2.15%. You know, I wanted to kick off with a discussion of interest rates because right now, Fed is on everybody's mind. Okay? You guys tell me. By the way, we're going to make this an interactive session tonight. I hate just sitting here like barking out, there's a trade, this is why you should do this. Forget all that. You tell me, why are the interest rates down? Give me a reason, okay? I'll pause. I don't care. It's just you, me, and 1,000 other people on tonight. Like, why are the interest rates back down? Look at this. It's absolutely uncanny. And like nobody seems to they just don't care. Why are the rates diving? Okay. Why are they absolutely diving right now? I like it. Actually, the number one answer in here is fear. That's also a pretty good one. The administration wants them down. I'm gonna leave that one alone. Actually, I'm not. I'm gonna talk about that as well tonight. So, all right. I think Fred probably hit that one right on. Okay. Fred actually came in there. All right. He said there's a rate cut coming. Another person came in here. Fear of slowing economy. Right. Is absolutely dead on. This, okay, effectively means, okay, one of two things. There's a rate cut coming because the economy is slowing right now. The global economy is slowing. Let me actually take this into context. What I'm about to show you in this next slide, this is deep, people. So get ready. Strap in. Long live the Fed. What you're looking at over here is a probability table. I'm going to explain it because I honestly, I was talking to myself earlier today, and I'm like, I don't know if I want to show this. This is going to get a little deep. All right. First of all, this is taken, okay, specifically a screenshot from the CME site. It's Chicago Mercantile Exchange. These meeting probabilities, when we talk about probabilities, these probabilities are based on actual markets. They're based on what we term, okay, Fed fund future markets. These are based on the Fed funds. So the probabilities here, this is not somebody's this is not somebody like, hey, I'm just making up numbers over here. Okay. No, this is actually based on markets. So what we're looking at, this is the next Fed meeting right there. Then there's another Fed meeting. Then there's another Fed meeting. Then there's another Fed meeting, right? These are the dates specifically, okay, of the upcoming Fed meetings. Now, each one of those Fed meetings, first of all, this is where interest rates are presently. They're at between 2.25, okay, and 2.5. That's when it says 225, 250, it means 2.25. The meeting that's coming up, that's what? 8 days from now? It's a week from now? There's an 80% chance that they leave rates alone. You with me? The following meeting, the subsequent meeting, there's only a 22% chance they leave rates alone. So what we're saying is, effectively, there's about an 80% probability of a cut. The craziest thing is there's only a 60% chance that they cut. That's cutting a quarter point. Over here would be cutting a full half a point. I'm going to change the color to make this a little bit easier for you guys to see, because I cannot stress this enough. This is night and day from what it was 2 weeks ago. All right. The marketplace is actually dictating. Look at this. There's only a 7% right there. I'm having a little problem with my pen. There's only like a 7% chance that the rates are going to be, all right, where they're currently at. That's what the market's saying right now. And there's, by the way, there's tens of billions of dollars resting in this marketplace. So people go, can you trust the marketplace? Right now, the marketplace believes there's only a 7% chance by the September meeting. They're saying, we got to cut rates. We got to cut rates. We got to cut rates. That's effectively what it's saying. And if you look deeper into this, they're actually looking for even a half a point cut. It's staggering. Okay. So when it comes down to it, when I looked at the previous slide over there, yeah, they're going to cut rates. That's what, long live the Fed. Now, bond market. Okay. The bond market says not only is a recession coming, but the Fed will cut interest rates to stop it. Now, I want you to look, okay, at the bottom of this screen right here, because I have been talking about this ad nauseum. This is actually late March, okay? And if you've actually tuned into TheoTrade before, we picked up on this huge. We didn't pick up on the article. Forget the article. The article was late to the game, okay? People just missed it completely. The interest rates, again, I want to reiterate this. The interest rates told you everything you needed to see. This isn't back in March when this article came out. The interest rates were already diving down, okay? You didn't need the Fed to tell you anything. The bond market tells you everything you needed to know. The economy is slowing down, and what are they going to do? Traders say the bond market may be overreacting, but while stocks seem to be ignoring the recession warnings and fears of the Fed, okay, more rate cuts can stop the economy from rolling over. Learn to love the Fed. First of all, I just, whenever I'm talking about the Fed, people are like, oh, he's bashing the Fed. Don't take any of the previously mentioned Federal Reserve commentary as hating the Fed. Why hate the Fed? You capitalize on them. That's what traders do. That's what we're here for. Who cares? I don't care if you like the Fed or not. What are your personal feelings on the Fed? Okay. I think the Fed makes huge mistakes. That's my personal feeling. Okay. They're usually behind the curve. They make huge mistakes. Okay. They don't know what, from one meeting to the next. And if they did know what they're doing, they're not telling you. But the bottom line is just watch the bond market. The bond market's going to tell you, learn to exploit the Fed. Love the Fed. Live with the Fed. The bottom line, the Fed creates opportunity. And this is my favorite. This time is different for the yield curve. The yield curve inverted. A lot of people don't even know what that means. Okay. But they said this last time too. In 2006, Bernanke said the same thing. Don't worry about the yield curve inverting. That was in 2006. Things got ugly, people. And we had a mini inversion. This is back in March. It was a March timeframe. It was a mini inversion. Then the yield curve just inverted, putting the chance of recession at 30%. You have to love this. Okay. Then all this stuff was back in March. By the way, the yield curve now, the reason I use these older articles, the yield curve now is vastly, more inverted. The IMF even came out and said its firepower is insufficient to respond to a major new crisis. And that was the Bank of International Settlements. That was the head of the Bank of International Settlements that said to the IMF, that's the International Monetary Fund, you ain't got what it takes right now to, literally to try to help the economy. And that's one of the things that kind of leaves me a little bit of an lurch. So what do you take all this with? Decisions have to be made. What are you going to do? What do you intend to do? A 401k, an IRA, long stock positions, mutual funds. I mean, what are you going to do with this? And that's where I say you got to have skills. Because most people, all right, this is where they're at with this. They just do not have skills. A trader or investor. And you know what? It's not even fair that I put the word trader in here, and I apologize for that. You're going to invest, you're going to trade, it doesn't matter. You're going to have to acquire a skill set. You're no longer in a market where a monkey throwing a dart can be profitable. If you know exactly what I'm talking about, there was a monkey that threw darts all the way back. That was during the internet bubble in 98, 99. The monkey that threw the darts outperformed all the different fund managers. There was a name to the monkey. The name of the monkey was Raven the Chimp. And Raven the Chimp was outperforming everybody, and they were publishing this in the Wall Street Journal. And it didn't, nobody liked the fact that the monkey was outperforming them. But right now, You can't be a monkey throwing darts. Advisors and mutual funds and indexing capital or a mix of bonds, it's going to underperform traders and investors in years to come. Like, you're going to have to do something more than just buy and hold. There's not going to be any more. Okay? There's just not going to be any more like, oh, well, what should I do? Look over the past few years of trade. I mean, I don't even want to bring up charts. You know as well as I do what's happened. Okay? The past 3 to 4 years. Your portfolio really isn't appreciating, but you're like, but we're near all-time highs. Yeah? Where were we in December? Okay? You're like, I was scared and rocking underneath my desk in December. And people kind of forget about that. The S&Ps are at 2,900 right now. They were at 2,300. What? We're 6 months, okay, and a few days removed from that. You're not going to be a monkey, throwing darts anymore. And I just don't want people to flush their money. You need to be smarter than competition. You need to have some skills. You got to be able to profit from some of the volatility that's coming out there. And the next thing is, just don't expect volatility to subside. We're going to go through these periods of volatility will subside. But the bottom line is, why isn't volatility going to subside? Well, first of all, we have the Fed. The Fed right now is about to be on the accelerator. Okay. However, I'm going to tell you guys something, and I'm just going to throw this in there. Okay. This is not part of the presentation. It's kind of off the cuff. Here, listen, the Fed. Everybody thinks multiple rate cuts are coming. I disagree. I actually think what the Fed is going to do is they're using, their rhetoric. They're using verbiage to try to knock interest rates down without physically moving the interest rates. So for the most part, what I'm saying is the Fed, they're going to be basically barking at you for the next 2 years. They're going to be less activity and more talk. Less activity meaning they're not going to take a lot of action. They're not going to lower rates as fast. They're going to lower rates. They're not going to lower them, though, nearly as fast as anybody thinks. They're going to actually bark at you and make you think they're going to lower them. Okay, try to bump the economy by what? Just by trying to juice it, by talking, and it's working right now, isn't it? The administration, the tweets. The tweets are unbelievable. You know what? I've been in this business for 20 years. I forgot about even the tweets. Every single day, there's something that comes out from the administration. Okay? Quite frankly, people are like, I don't like it. Why? Embrace the horror. All right? It is what it is. You got to embrace the horror. It's fantastic for intraday trade. There's trade wars. There's corporate debt. There's student debt. There's China growth that's slowing. There's European growth that's slowing. There's U.S. growth. U.S. growth. I put it as questionable because there's no hard data over here. There is some hard data, but it's not hard enough. But U.S. growth is questionable. But why else would the administration be calling for rate cuts? Think about it. Everybody sees the writing on the wall. The bear, it's fierce. Again, embrace the horror. Core strategy and trade logic. Today, I want to introduce you to what I call a real world strategy you can start using tomorrow. Now, I'm very averse to risk. We absolutely hate risk here. But as I mentioned a moment ago, it's not just, one real world strategy. The strategy I'm talking about tonight, it's what I do, right? With the bulk of my capital right now, this is what I do. We're going to discover a strategy you can use in order to profit from stocks heading down, okay, or are range bound without taking on drastic risks. Now, I do not want you, to take this as, all right, I'm just bearish. The bottom line is the markets have been ripping up, falling. We have to employ, strategies with portions of our capital or a substantial amount of our capital. You can't be on one side of this market anymore. You can't just be like, let me find the stock that's going up. Let me find Beyond Meat. Okay, if you have no idea what I'm talking about, the IPO that came out in early May, Beyond Meat, went beyond parabolic, which is shooting to the upside, and then fell flat today on its meat-laden face. It wasn't good. Anyway, there's when you look at this stuff, listen, we're going to talk about the strategy. We're going to show you how to profit from stocks heading down or range bound. And that's important, the range bound aspect of it. Volatility is going to help the strategy substantially. Okay. So let's get short. Let's get short the markets. Doesn't mean you have to short everything, but let's get short. Allow us to briefly review the structure, the risks, and the logic of getting short the market. Shorting is in effect selling shares we do not own. How can you sell something you never owned over there? Well, shares we short are borrowed from our broker, okay, and they're sold with the intent of later buying them back at a lower price. Does that make sense to everybody? Because I'm actually going to show you, all right? I'm going to show you just that. All right. So we're going to use an example, and let me grab my secret squirrel pen over here. We're going to do example. By the way, in all my examples, instead of calling it a stock, I call it a stock. All right. So stock. So we're going to short a stock named stock, and we're going to short it at $135 a share. Right? So you go out and you sell a stock short at $135. You go, where'd the shares come? Well, what really happens is when you buy a stock, so somebody in here owns Apple, right? A-P-L. You own some Apple. Well, and you own, let's say, 500 shares. When you own 500 shares of Apple in a margin account, your brokerage firm literally comes in there and they do what's called hypothecating the shares. They take the shares and they go, I got your shares. And they lend out those shares to who? To the short person. And you go, I didn't allow them. Yes, you did. When you signed the margin agreement, you actually said, you can do whatever you want with my Apple. So a lot of people don't realize that. They borrow your Apple stock. And you go, does that affect me? No, not at all. You're still long Apple. Okay. So you're long Apple. Okay. And the person they lend to is short Apple. Right? So what do you want to have happen to your short shares? So you went out, you borrowed those shares for $135. You hope that the shares go down. So if they go from 135 and the stock declines in value, you could buy it back for 95. What do you make? $40 a share. But wait, there's more. What's the more portion of it? Well, how about if you go out there and you sell it at 135 a share and it shoots through the roof and goes to 200? Then what do? You go, vomit all over the place. Oh, it's called puking up your position. And then, of course, you have to buy back the shares. If it goes to 200, that, people, is a $65 loss. It is hideous. It's absolutely hideous just to go out there and short shares. And people are scared to death of this, right? Now, I can go through real examples. Right? We're going to do that. I can go through real examples all day long of short shares. But I want to talk about candidacy right now. I want to talk about actually like getting in doing this. So is everybody comfortable right now with the idea of shorting? By the way, I'm reading some of it in some of the comments in here. Is everybody okay with the idea of shorting right now? So listen, some of you guys are going to be watching this on a recording, and you're sitting there and looking at it. You go, yeah, I'm okay. Go forward. All right. Because there's always newer people in here. There's some people that have never had experience with short side positions, and it's important that you get, like, you can borrow the shares. People always wonder how it's done too. After I had 15 years experience at the brokerage firm, like, you learn everything there. I mean, you see literally at a brokerage firm, you see everything. And the position that I worked in, I ran education for 7 million clients. You literally get to see everything. You get to study people's accounts. It's a wonderful, wonderful place to be. Now, before we get into the context of, first of all, you can't short stock in every account. And if you short stock, oh boy, do you have to have a lot of money. So we're actually going to clip the risk out in a minute. But before we get there, finding a short candidate. Now, I'm going to give you one. I'm going to give you one that fits right now my criteria. It's actually one I've been talking about a lot. Anybody here tune into the nightly videos? If you tune into the nightly videos, I've actually been talking about this one a lot. Consumer staples. And people are like, what's consumer staples? Oh, it's stuff that you need. Stuff like Procter & Gamble, or you think of like a Walmart. And consumer staples has been absolutely parabolic upside move as of late. And then what that means, when I say like a parabolic move, like it basically means, this ETF, and by the way, I'm generalizing when I'm saying consumer staples, but we're actually going to use an ETF, and it's going to be called the XLP, right? This ETF, the chart just goes like this, like straight up. There's little bits of like, in there, but it pretty much just goes straight up. Literally, consumer staples appears to be impervious to all the recent volatility. That's what everybody seems to believe anyway. It's like, oh, this thing is impervious. On the contrary, though, in every recent bout of extreme volatility, consumer staples has been crushed with the rest of the S&P 500. You didn't have to look back that far. Why should this time be any different? Why should it be any different, right? Well, here. This is actually the XLP. This is the XLP. Bring it. When I talk about parabolic, am I not like kidding over here? Look at that price chart. Like it just doesn't, like this is redefining insanity over here. Now, the point that I want to make is this stock chart has been absolutely straight up. They're using consumer staples as a highly defensive position. But let me ask you something, okay? The last time the market got seriously volatile, when was the market the last time it got seriously volatile? Okay, I'll tell you exactly when it was. It was right here. This was actually coming into what? October, November, and December. Okay, literally right into Christmas. When was the time before that the market got crazy volatile? It was actually the beginning of 2018, right there. Okay, this was actually the volatility event that happened in the beginning of 2018. People go, what happened before there? I mean, come on, people. I just go back again and again and again and again. Right? Here's actually the presidential election, and here's where it spiked after the president. I mean, in every recent bout of volatility, this is a 3-year chart. And I took the screenshot today. XLP has been involved. Okay, why wouldn't you want to step up to the plate? That's up to you. But I'm telling you, it fits the definitive criteria. Now, here's the issue, though. Short positions, we got some issues. I got some issues with you people. Short positions technically have unlimited upside risk. As I talked about a moment ago, it's a $135 stock. Okay, think about it, though. You short a stock, and it could just run up indefinitely. Okay, if you don't believe that, just look at Amazon. Amazon just runs up indefinitely. Why? Because it likes to kill all the short people. So short positions tie up heavy amounts of capital and margin. Short positions cannot be placed in retirement accounts. Short stockholders also pay dividends. So you got to look like dividends, ruggy. I mean, look at some stocks like Verizon, AT&T. These pay some big boy dividends. Verizon has over a 4% dividend. AT&T is like a 6% dividend right now. Do you realize if you got short either one of these, okay, you're going to end up paying like 4% or paying 6%. And most people don't know that. So there's some issues with short positions. You have to overcome the issues. We got issues, overcome them. How can we build a short position? Control our risks, not pay dividends, and place the trade in a retirement account. Well, we're going to get short without shorting the stock. In our aforementioned example, we kind of shorted some shares of XLP. So now we're going to get down to it. In substitute of short shares, okay, instead of short shares, we're going to elect to buy a put option, okay? But most people make an absolutely monumental mistake. They don't really understand options. Everybody thinks they understand options. And it's a pretty easy market. Like you buy something or sell something. And by the way, when it comes to options, okay, there's 2 types of options. You got a call and you got a put. Okay? Because there's some people tonight that have never had options experience. By the way, options. Is it okay that I talk about options for a second? Is that all right tonight? Because a lot of people, as soon as I mention the word options, are like, oh, he said the O word. Okay? Listen, I said the O word. This business in options, people make it far too complex. You got to call and you got to put. Right? Am I correct? What can you do with these? Well, you can buy them or you can sell them. What can you do with a put? You could buy it or you can sell it. How complicated is this business? What do you want to do? I want to buy it. I want to sell it. What do you do with the put? I want to buy it. I want to sell it. Then they start coming up with these like ridiculous names for strategies. I want to do an iron, okay, monkey, fly with cheese. Let me give me a double quarter pounder with cheese and a side order of fries. Like, who cares about iron condors and mambo combos? And, listen, there's so many different names for crap out there. In the end, you just buy it or sell it. In this case, okay, the put option will limit our risk to the premium paid and provide us with an outstanding downside potential. So here's a trade. Hey, look at the date. That is June 11th. And it's right before the close. By the way, I'm on Pacific time, so it's right before the close. And I went out and I purchased a September 68 put option. I paid $9.65. Now, $9.65. For some people, they're like, that's too much money. There are trades all day long that I get into for $2. But this one, listen, this is not, this one is not just for the faint of heart. This is a stock that's just straight to the upside. So if you did like one trade in here, it would cost you $965. $965. So people go, oh, but I only have a $3,000 account. If you only have a $3,000 account, I wouldn't do a $965 trade. I would find one for $2, and I can actually show you how to do that. Not right now. Not right now, because I want to continue on, okay? So here, $9.65 to short this little beast, but all the way out to September. The key, though, here is knowing the right put to buy, okay? If you don't have the right put to buy, you're dead. You have to purchase the right option. And what that option is going to do, well, using a put option in place of short shares, okay? This is the exact market that I placed. So I'll give you the down and dirty of it. And by the way, it's my account. It's a live trade, right? Believing the consumer staples ETF, the XLP, would go down, we initiated buying the 68 put option rather than shorting the stock. The risk is limited to the debit paid for the put and provides us a nearly dollar for dollar move if the XLP sells off. See, that's the important point over here is I need a strategy that is going to work when this thing starts to sell off, okay? And I don't know if it's going to sell off tomorrow. I don't know if it's going to sell off a week from now. I gave myself what we term duration, and I want to make this word clear. Duration. Why do you need duration? In this market today, listen to me carefully. In this market today, you need duration. People are like, I held it overnight. That is not duration. You need duration. Why do you need duration? You're going to get tweeted upon tomorrow. You're going to have economic data. Retail sales comes out on Friday, this Friday. It's going to be the mother of all retail sales because everybody wants to see if the economy is slowing down. We go in this marketplace, we are just jumping through what they call binary events. Binary event, binary event, binary event, binary event. What a binary event means, it's a major 50-50 for the market. So this is a 50-50, this is a 50-50, this is a 50-50, this is a 50-50. But I'll tell you what, you give yourself enough duration, that crap is going to pay off. That's what we need to be successful, okay, in a tweet-filled fantasy of a marketplace. And that's exactly what we're in. It's just event after event after event. People are throwing their hands up in the air and going, this sucks, man. I can't take it anymore. If I get tweeted upon one more time, it's just because you're not giving yourself the gift of time. That's all you have to do, okay? Why we use a put in place of short shares? First of all, buying the put option is nearly the equivalent of being short stock. Okay, so why do we do it? First of all, ties up minimal margin. It can be done in a retirement account. Limits risk of an upside exposure. Like if this marketplace just explodes to the upside, so be it. Put buyers do not pay the dividends. Okay, and the put, it can be held for an indefinite period of time. We use something called a roll. This is actually a roll that I did just a little over a week ago. It was a Lululemon roll. I actually rolled Lululemon for a $13 credit. I haven't rolled. I was talking about the XLP. I haven't rolled the XLP yet. Why? I just put it on, right? So the XLP trade hasn't been rolled yet. This little monkey in Lululemon, Lulu has been rolled. And Lulu, it's volatile. Lulu went like this. Lulu went tank. And this was the roll in the tank, and then it shot right back up. which is absolutely fantastic because it's giving me another spectacular opportunity again and again and again and again. Now, that is how initially we're going to buy a put. The put increases in value as the stock goes where? Down, right? And people are talking about, hedging the portfolio. Okay. Do we do that? Sure. You can absolutely hedge your portfolio. But in this particular time frame, when everybody asks the question about hedging the portfolio, okay, I'm going to ask you this question. Do you think this marketplace, not tomorrow, not the next day, over the next 6 months to even a year, do you think this marketplace appreciates to the upside? And I really want you to answer that because people are always asking, like, should I hedge? For those of you who have no idea what a hedge is, it's reduction of risk to the downside. People are like, I own some Apple. Can I hedge it? I ask, the next 6 months, maybe 9 months, maybe a year out from now, do you think the market's going up? They go, no. I go, then why are we long? Then why are you long? Because if you don't believe the market's going up, there's no reason to hedge. Hedge is a short-term Band-Aid on a gusher. And if you think a gusher's coming, get the hell out. It's okay for me to say that, right? I mean, and you should get out if you're gonna be in that kind of position. Now, with this, I mean, listen, I'm trying to turn the tables because I recognize that so many of you own stock. You do, okay? People own stock. There's nothing at all wrong with owning stock and owning a lot of stock. It's fine, right? So you own some stock over there, good, great. But when you own stock, it leaves you exposed if there's a down move. In this strategy, I'm going to take advantage of the down move, right? So I just want to show you this in a little diagram over here because we went out, okay, and we buy, in this case, 68 put. Now, the stock right now is at 58. So if the stock starts to go down, effectively, let's say the stock all the way goes, let's get crazy. Say the stock goes down to 50. If the stock goes down to 50, what is the 68 put worth? Well, 68 put is worth what with the stock trading at 50? Okay? 68 put is worth what when the stock is trading at 50? It's got to be worth at least, okay? We're not any longer at 58. It's got to be worth at least what? $18. All right? It's going to be worth at least $18. Could be a little bit more if volatility kind of picks up, but it's worth at least $18. So what I'm trying to emphasize to you is you went out and you buy this put, you're getting this dollar for dollar movement to the downside. Not a bad thing, okay? And again, your risk is capped to whatever you paid for that put. Now, well, allow us to ice the cake. How do you ice the cake? I don't know, sell some options premium against our short position. Would you think I was just going to sit back and go, oh, let's just go out and let's hope that the market goes down? Let me tell you about markets and hope. Hopium does not pay the bills. Hopium, okay, sucks the life out of you. If you sit there and you short stuff and you just go, I hope we go down, okay, why do you think I want the markets flat, volatile? Like, this volatility is good. That's why I'm like, I want to be tweeted upon. When I say tweeted upon, I don't know. I've changed, tweet, okay? There's a verb, maybe an adjective, okay? Things are tweetwastic, which is, yeah, it's good stuff. Why not sell option premium against your short position? What does that even mean? Sell premium against your shorts. Well, I bought the September XLP 68 puts. Can I sell shorter dated July options against the put that I bought? I can. Yes, in doing so, I'll collect about 50 cents in the next month. Now this isn't exactly hitting a home run. But let me just say something to you, okay? The XLP, this isn't like the most exciting product out there. All right? You could pick more exciting products to want to get short. That's fine. And you could actually go out and you could sell short-dated puts. So now what you're actually doing, okay, on a month-to-month basis is you're actually reaping the benefits, again, of selling, here, shorter dated put options against it. So now we're not just on a wing and a prayer. I'm not just sitting there saying, I hope that the XLP sells off, because that's not going to work. We own the 68 puts for September. Sell something against them. okay? Because you can sell. And what do you can do the next month? You can sell. And what can you do the next month? And you can sell. And what do you do the next month? And sell. And you just sell premium against it. And before you know it, you're like, oh, it's only 50 cents. Yeah, well, 50 cents times 6 or 7 months in a row. And you just keep rolling the strategy out. Even if the stock stays totally flat, even if the thing runs against you, the premium that you're selling is padding the landing. Now, why be short and sell premium? That's where we want to get to. Skew. Love it or leave it. There are distinct advantages of being short, and people aren't aware of this. The option market favors the sale of put options in what's termed skew. Okay? In what term? Skew. In effect, you collect more options premium for selling put options. And you're like, I don't get it. Well, you're about to get it. Here. This is the spiders. I took the screenshot a while ago. That's the spiders right there. Okay? These are puts. These are calls. Puts, calls. Look at the price of the put. Look at the equidistant. Equidistant. What does that mean? It's the same distance. Equidistant out of the money. Did you know that the puts in the spiders, which is the S&P 500, the puts are trading for what? 3 times more than the calls. People go, I want to sell a covered call. You want to sell a covered call? Guess what? I just want to sell a covered put. I'd much rather sell the put because the put's going to pay me almost 3 times more than the call. Think about it. I mean, listen, which would you rather sell? You tell me. Okay? You tell me. And there was a question that came up. Can someone take your puts? No, we're buying puts. We're not. Okay? We're initiating the trade by buying puts. The option that we sell is just icing the cake. Okay? And we actually talk about like how to roll this, all the nuances. These are the right questions, people. They're the right questions. But in this particular case, what would you rather sell? Would you rather sell put options or would you rather sell call options? You tell me. Okay? Again, this is the interactive portion of the session. This is where everybody types in. There's like 1,000 people and like so far 8 people. 8 people have typed in. Oh, we have 9. Oh, here they all come. All right. I mean, I'd rather sell the puts. By the way, skew exists. The puts. Oh, somebody hit it right on. I have to give credit where credit is due over here. Carl actually said, he goes, juicy puts. He's exactly right. The juice is in the puts. The implied volatility of the puts is 17. The implied volatility of the calls is only 11. And using this strategy, again, we're buying a deep in the money put and selling an out of the money put. The out of the money puts carry a lot more. I mean, look, selling premium against our puts, selling short dated options against our longer dated puts. It brings in, you can even do a weekly income stream. That's dependent upon you. People always say, is this going to take a long time? Okay. Well, you know what? I'm not going to tell you that this strategy is going to be instant coffee and instant tea. I'm cool with like people that are just like, hey, I want a really hands-off strategy. You want a hands-off strategy? This is a hands-off strategy. But if you want to go out and you want to sell premium every week, it takes a little bit more. But the cool thing is when you sell premium every single week, it lowers your cost basis into the put we purchased. Okay. Via bringing in weekly premium, we can even profit when a stock stays flat or range bound. Like when stocks are like up, down, tweet, 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 tweet. That's just tweet-twastic. So, by the way, tweet-twastic came from a video I was filming about, 3-4 weeks ago. I was doing a video and the word tweet-twastic just came out. I said, I'm not going to edit that. It makes sense to me. Anyway, it takes substantially less risk than shorting stock. And selling puts places the options skew in your favor. Like, what's not to love so far? What's not to love? I don't know. What isn't to love? Listen, you're still taking risk over here, but these are very nice, effective risk shots, and they're worthwhile. What we call this, it's how to collect income being short. The idea here is really, really easy. We want to achieve maximum reward for minimal upfront risk and be capable of selling options premium. You want to be capable of selling options premium, especially when the volatility of the marketplace kicks up. You want a strategy that screams limit your exposure and maximize your premium selling potential. This, first of all, this is just a huge potential of the XLP position. I went back to the XLP position because I put it on today. And, you know, even if this thing rallied, I mean, the XLP, which is right here, right there at 58. Now, I'll remind you, the XLP has been straight to the upside, right? It's already exploded. How far to the upside? For me to take a full loss on my strategy, you got to be north of like $70 for me to lose everything. You kidding me? It has to go up another $12. So instead of just going up like this, it would actually have to go literally straight up. Do you know the probability of that? This is the kind of stuff, okay, that we teach here at TheoTrade. That's the kind of stuff that you need to know. That's why the selection criteria is so important. What criteria is? It's just a recipe to be able to get in to this particular trade. Let me show you a couple other positions. Here, this is a caterpillar position. Now, this caterpillar position, I'll go through a couple of details. I initiated a caterpillar position all the way back, get this, January 8th of 2018 at apparently 10:25 in the morning. This, it wasn't a cheap trade. It's Caterpillar. Caterpillar at the time I initiated the trade, look, okay, look, it was a $170 product, okay? I have been in a short, rolling the position all the way down now to $127. At no time have I ever been out of the Caterpillar position. I have been rolling this thing forward. You're like, that's a long time. Yes, but because I'm not short the shares, I'm rolling profits off. The capital is tangible, and I take the profits and I push them right into other strategies. So what are we ahead? Well, we're ahead from 170 all the way down to about 130, which is like $40 a share. That's nothing because we've been selling premium. I'm just going to show you what the positions look like. And by the way, this is only, so we're all clear. This is my account. It's the last 365 days, but this position has been on for 18 months. Okay. Not every roll is perfect. There's a debit roll. Here's a credit. There's a credit. There's a credit. That one's a debit. Not that good. It's credit, credit. I bought another put. Okay. I actually amplified the position in December of 2018 because it fit the criteria right there. By the way, that's early December of 2018. What happened to the market in December of 2018? Okay, you tell me. Here, go look. The exact date that I entered that position. That was December of 2018 that you were looking at. And again, I want to reiterate this because it was December 3rd. There's the initiation of the position. It actually fit the criteria. Absolutely tanked on me. It was stellar at that point. Okay. So again, as you look and we were rolling this thing forward, it's every trade that I've had over the last 365 days. So as I was showing you off to the right-hand side, okay, there's credit after credit after credit. There's a few major debits, okay? But again, you have to be aware. Not everything is going to be perfect. Not everything's going to be like 100% in here. It's absolutely huge, though, what the Caterpillar trade has actually done for us. Moving on. That's a live cat. Let's actually go to a live JP Morgan example. The JP Morgan example, I've been in and out of this for some time. Now, I'm going to flip this one over here and just show you, okay, briefly. This is 300 days back. This is the initiation of the position at $24, okay? This is actually a trade we shared live. This is $14 credits. This is a $4 credit, $3 credit, another $4 credit, debit, credit, closing the position. It's a home run. Look where we started. It's the 140 put. Look where we ended, the 108 put. All right. We rolled this thing down for what? $32 in credits. It was huge. Moving on, because some people don't have $24, right? Moving on. Let's get to some stuff that's more tangible, more recent. Okay. These are trades that have been going on for a long time. This is actually live example in FXI. Again, all of this is my account statement, and this account statement is taken directly from TD Ameritrade, specifically the Thinkorswim platform. Here is an initiation of my FXI position. FXI position, this one only cost me $3. Okay. By the way, I kind of subsequently loaded up on this one. I did it at 2 different times. I don't mind saying that. All right. I had a bunch of orders and I put myself into a pretty sizable position over here. So I bought some 48 half puts, bought some 50 puts, some 51 puts. Okay. Rolled them all off for credit. This one, I'm still in. This is China. If you don't know what FXI is, it's China. Don got short China. Look when I shorted China. Okay. I didn't know anything. Okay. What did I know? I knew that it fit the criteria for it. Initiated FXI duration short right here and here. Okay. Why did I do it at 2 different times? I wasn't big enough over here and I knew it. I was just kind of staggering the position to put it on. And now we're down here. Listen, this isn't a complete home run. My average price is probably short at 45. Okay. Now we're trading at the 41. I'll take what the defense gives me. This is what you guys have got to learn right now. You want to survive. I'm telling you, this is what we're doing. Okay. This is the place to be for a substantial period of time. Fear not collecting income being short. A lot of people that join us, on a webcast like this, they don't know how to short, okay? Or they don't know how to trade options. It's fine. If you don't know how to trade options or you have limited experience, just don't let this stuff intimidate you, okay? You're going to need these strategies for the foreseeable market future. I'm not, listen, for me, this is the strategy that I use right now with a bulk allocation, okay? We can show you how and when to place the strategies. It's a matter of a couple of hours. What we do, though, at TheoTrade is we create detailed recipes for everything, every single strategy, including what we term, this is what we call collect income being short. And people have to recognize they just go out there into the marketplace and they go at it alone and they're just like, I'm so confused. We build recipes. You don't bake a cake without a recipe, so why trade without one? Everything that we do, it's like a pre-flight checklist. It's a pre-flight checklist. Okay, it's going through and saying, check, 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 check. How do I get into this? Check this, check this, check this. Everything has to fit to do what? To execute the trade. Everything has to just check it off to fit those trades. All right. So as I continue on over here, by the way, I see some great questions over here. Somebody's actually asking, and I'm going to get this in a moment. What would the percent profit be on the trade? If I went out there and I paid, for example, okay, $25 for a put, and I collected $40 in credit, right? Obviously, $25, if I collected $25 in a credit, it'd be 100%. That's effectively the way to start to calculate return on investment, if that helps you guys. And I'm going to come back and hit all these questions again and again and again. And there's a ton of them, which is good. I'm going to hit them all, okay? But this is what you need to know to successfully collect income being short. And this is like, again, criteria. This is what you have to know. What makes a viable short candidate? I just pulled XLP out of thin air, JP Morgan out of thin air. Okay? You really want to know what initiated the JP Morgan trade? Interest rates. Okay? Interest rates. As soon as we saw the interest rates and the Fed starting to get dovish, which is you knew that interest rates were going to come back down, we started jumping all over the financials because financials are going to get killed. So I've got short positions in Citi and Bank of America, the XLF, okay, anything in the financial sector. What makes a viable short candidate? Okay, that's what we help with. And there's actually a checklist specifically for this. What volatility should I seek out? You notice I don't have anything like Tesla in here. It's a suicide mission and something like that. Tesla, it's insane. You will not win in those underlyings. You need to pick stuff, okay, that's the right volatility. The volatility isn't right, you cannot do the trade. What options expiration do I select? Ooh, yeah. Why did I use September? Most of my positions actually are in August right now. Okay. What should be the delta of the option I buy? Delta, delta, delta. If you don't know what delta is, it's going to tell you exactly what option to buy. It makes the world a lot easier, a lot happier place. What options do I sell? We'll actually tell you the delta of the options to buy, the delta of the options to sell. How do I roll my options? What is a roll? We tell you all of that. What's the right amount of risk for me? You know what? I always tell people, I can't tell you how much risk to take, but I can tell you how to figure out how much risk to take. I can tell you exactly how you can figure out how much risk to take, depending upon the account size, depending upon the allocations, all of it. That's what matters, all right? That's what we do here at TheoTrade. It's criteria. That's what TheoTrade is. It's just TheoTrade. It's recipes in trading. You're going to find out that trading, it's always about answering the what ifs. What's a good stock, ETF candidate for a short position? What's the correct options expiration cycle to buy a put? How much capital do I commit to these positions? What strike price options do I sell and how many? What options do I buy? right? We have the answers. All we do here at TheoTrade, well, we have strategies, right? Everybody's got strategies. You read a book, you'll find a strategy. You go online, you'll find a strategy. Somebody will explain a strategy on YouTube. Yeah, well, we build recipes with definitive criteria and checklists. This is the stuff. Listen, I worked at TD Ameritrade, okay, from 2009 to 2015. And when I was at TD Ameritrade, we ran the largest stock market education firm on the planet. Okay, we had one course there. It was 18 months long. People paid $24,000 to go to an 18-month long course. You know what it didn't include? It did not include criteria. You want to know why? Because they wouldn't let us. They wouldn't let us include criteria because like, well, that's telling people what to do. Yeah, no crap. That's what people need to do. They need to be, step by step, a checklist to get into this stuff. It's one of the reasons I left because, the regulators were all over you. The attorneys were on you. Listen, this is what we do at TheoTrade. That's what a checklist. It's about variables, and each unique variable you're going to encounter. It's the how, it's the when, it's the why, it's at what price. It's just the beginning, though. Literally, that's the beginning of the variables you're going to face when you're going to collect income being short. The secret you're going to find out, it's in the sauce. As I said a moment ago, you could read about a strategy. How do I get short? You read about it anywhere. Are you going to read about what candidate do you use? Huh? Anybody going to tell you that? No. You should get short Tesla. Okay? You're going to get killed. You should short Beyond Meat. Oh, I mean, come on. You can't even short it. Right? You have to know what to do. You have to know what options to select, what options to sell against it. The following strategy and corresponding criteria, it requires the utmost attention to detail. The detail, that's what we spent years fine-tuning. Right? The detail, all the stuff that we talk about here at TheoTrade, okay, is the accumulation, okay, of what? Decades of experience in the marketplace. And I'm going to tell you one other thing. It's also the accumulation of everything we learned watching 7 million accounts at TD Ameritrade. And, I bring up TD Ameritrade because we had access to 7 million accounts. Where do you think a lot of this criteria comes from? It comes from checking for people what works and what doesn't. Here's how you collect income being short. We have a course. It's called How to Collect Income Being Short. This is the workshop curriculum. Okay? How to short the market with very little capital. Okay? How to use options to short so your risk is minuscule compared to shorting the stock. Discover how you can create short positions in any retirement account so you don't miss those opportunities. How to easily identify the most promising short candidates. That's huge. Proven strategies used by seasoned traders to sustain short positions. Listen, you got to sustain this stuff. What did I say? Duration, duration, duration. Wait for volatility to strike. Okay? You have to sit there and have duration. Okay? We're actually going to look at a rare tool called Skew, and it'll help you finance those short positions. Okay? Discover step-by-step criteria. This course, How to Collect Income Being Short, it's about the criteria. What the advantages and disadvantages of selling short-dated weekly options. Okay? Discover benefits of inverse ETFs. Okay, and the risks of inverse ETFs. People, I want to use an inverse ETF. Stop it. Don't do it. You'll find that the synthetic short and in the IRA is going to be way better. We'll show you how not to use those products, how to determine position size. Okay, and again, last but definitely not least, how to roll the positions. You are not going to have to sit in front of the computer all day long. This is a very hands-off, very hands-off logic and strategy. What our members are saying here, and I wanted to throw this up because of perfect time, all right? TheoTrade is a one-stop place for all things options. The content is rich, something for every level of trader. There are hundreds of archived seminars, coaching sessions, trading room access, the energy of the educators, okay? Hopefully you felt that tonight. Theo, it's worth the money invested. Here's also one of the ones that I love because this one is kind of near and dear to my heart. And I really appreciate the fact that Nathan wrote this, but as a multi-decade risk manager for one company I worked for and for owning 2 other businesses of my own, I must say that your perspective on portfolio risk management is exactly how I attempt to explain those, to close to me with significant investments. Quantification via standard deviation, of near and long-term timeframes are critical considerations for responsible and successful endeavors regardless of the underlying market, related or otherwise. It's refreshing to listen to your perspective, on the same day. So I totally appreciate that and thank Nathan kind of publicly for that. This is How to Collect Income Being Short. The trade instructor, it's me. The course is available right now. It's available right now. What we've actually done, Course is archived. It's available when I say immediately. You can stream it. What is TheoTrade? Like, people don't really get it. We're Netflix for traders. The class includes a slide deck. That slide deck includes all the criteria. It's what to do. Okay? It's available immediately for download. You can also watch this on your mobile device. You can watch it, as I said, 24/7. Watch it on a computer, a tablet, a mobile device. You can be at 30,000 feet because we have an application, a mobile application, okay, found both on Google and, of course, on Apple. So the class also qualifies you for reduced commission rate. You sign up for the class tonight. We'll get you a reduced commission rate at TD Ameritrade E-Trade, okay? Class is $297. Of course, we have a special for it tonight, right? I cannot stress this enough. The opportunity to get short and collect income. This is now. This is right now. You have got to learn how to do this right now. I mean, we have interest rates falling, the market going up, the stars are aligned. It's why we did this presentation tonight. Okay? I mean, literally, we only decided on this, on Saturday. I'm like, I want to talk about getting short and collecting income because this is what's going on right now. And everybody that goes to this, I've been there, I've done that. But many of you guys tuning in, you've been, listen, a lot of people tuning in, you've been through the gauntlet of paid classes of indicators. I like to call things secret squirrel black boxes. This is crap it's garbage. Only to find you just have to buy one last thing to make all the difference. But wait, there's more, right? People have been through educational garbage before. Well, at TheoTrade, we've had enough. We've had enough of educational garbage. We've had enough of educational sales pitches, and we put an end to it. We're going to disrupt financial education. You got to remember something. TheoTrade, we're built by professional traders. Everybody here has a minimum of 15 years of experience. There's no professional salespeople at all. None of us at TheoTrade. I mean, we came from the professional trading world. Never any sales experience. Okay? I never sold a course in my life. Here, what do? Yeah, we want you. Okay? We want you to be part of TotalTheo Unlimited Streaming. But educating you, it's our only goal. And we're going to demonstrate that. And hopefully we change the way you view education in this marketplace from here on out. Because there's so much garbage out there. People, the bar is set low. All you have to do is set up a site. And you're like, I'm an education firm. Yeah, well, nothing is like TotalTheo Unlimited Streaming. Nothing. Again, what our clients are saying. Hey, I wanted to give you guys a recent one, so here it is. Okay? It's June 10th. It's yesterday, 9:22 in the morning. The Amazon trade is paying for TheoTrade for a few months. Thanks. Okay? This one, just wanted to drop you a quick note. Okay? I was over at the previous place you were at and got fed up nonstop. Sales pitches and classes and indicators beyond the membership. Not to mention no method, no madness. And again, appreciate how you have everything set up here at Theo and look forward to years to come. It's from Corey. What TheoTrade does, what TheoTrade gives you, we give you access to over 83 trading classes. All of the classes are available immediately and on TheoTrade Mobile. Here's some of the classes. How to collect income being short. That's what we're talking about tonight, right? You want access to the class? You got it. The next big short, high probability. Guide to selling high probability spreads. Iron condor, selling premium, surviving and thriving in extreme volatility. Day trading NASDAQ futures, covered calls. Essential skills for consistency in trading. The top 10 skills for growing small accounts, pairs trading. There's 83 different courses. It's $5,000 plus in classes alone. You go look out there. You're going to pay $500 per course anywhere you go. These courses, they're all included. By the way, we don't charge you for any of the individual classes. Why? We just let you stream them. And the courses themselves, they absolutely smoke anything out there. Nobody has criteria like we have. Did anybody else work in the industry, okay, for 15 years? We have a professor of finance from Loyola, okay, who actually writes all of our charting curriculum. Okay? We actually have Brandon Chapman, who wrote, okay, a book for a class that cost $24,000, and he'll even tell you the stuff that we do here absolutely smokes it. This is just the classes. We're not done. You have access to 59 proprietary indicators and scans. Auto expected move. Auto expected move is the most complicated, that's the most complicated indicator ever written in the history of TD Ameritrade. We have it. We give it to you for free. You go try to buy it. You can't buy that thing anywhere, right? That thing is unbelievable. You charge at least $1,000 just for auto expected move. We give you that. We give you gravity points, RSI Laguerre, Quantix, NQ levels, next generation squeeze, complex position tracker, IV rank versus IV percentile, Theo Quant, unusual put options activity, Sizzle, SPX. Again, at least $1,800 in indicators and scans. We're not done. There's coaching here, live trading, and email trade ideas. We have a live trading chat room. We broadcast 6 hours per day. We provide real-time trade ideas in this chat room, real-time market insights and analysis. I open almost every single day in that trading room. We email you trades, okay? And we'll highlight, those trades. 4 distinct trading portfolios. We have different portfolios. We email out different styles of trades. We have also daily coaching sessions. And we directly answer your trading questions. Is that enough? You need support? We've got it. Here, that's access to over another $2,000 in support, trades, and insight. Think about this. It's almost $9,000 in classes, live trading, coaching sessions, proprietary tools, how to collect down income being short. That's the workshop. It's on demand. 83 classes, new monthly classes. Every month, okay, we're hitting you with a new class. Every month. We have live trading chat room. How do you think, by the way, we got 83 classes here? Because every single month we're coming out with something new. Archive 24/7. Okay, email trade ideas, trading indicators, daily coaching sessions, email support, and TheoTrade mobile. TheoTrade mobile, it's awesome. Just download it, get to watch everything. The entire thing, okay? It's what we call TotalTheo unlimited streaming. It's $297. That is for a quarter, okay? It's not a month. It's for the entire quarter. It's only $297. Why do we do it? First of all, we're heavily supported by brokerage firms. The brokerage firms love us. Why? Okay, you don't have to worry, I don't care what brokerage firm you're at. Okay, the brokerage firms love us because we send them great clients, but we give you discounted rates to some of those brokerage firms. I'm going to show you a little bit about TheoTrade here momentarily, but I want you guys to see just one more thing, okay? Right here. By the way, you guys are rocking it. Very impressed. This is really refreshing to have you guys putting this together and sharing knowledge and not upselling everything and turning and burning your customer base. You got a customer for life in me because of this approach. And I'm sure I'm not the only one. It's from David. And I love that one. By the way, here's the address. TheoTrade.com/TomTomSam. Let me show you guys TheoTrade. All right. So here is the site. This, people, this is TheoTrade. So come on. It's going to pull up. It's not responding, but it's going to pull up here in a second. This is a little bit about TheoTrade. So a few things I want to show you. First of all, what you're in right now. Okay, what you're in, this is where we broadcast. Obviously, we're off air. The markets are not live right now. This is the chat room. You can talk to anybody you want. There are right now just shy of 4,000 members here at TheoTrade. So that's a little bit about the chat room, what it looks like. Next thing, people go, I've never traded anything. We have a start here menu. See where it says start here? Start here. Options 101, 201. Okay, what products to watch and why, order execution, you name it. Next thing on the list, the member home, archives, okay? We have archived everything. Every single thing that we've done here at TheoTrade since the day we launched is archived. We are the Netflix for traders. Name a topic, people, okay? Let me just type in a word like volatility. Hit enter, okay? Volatility and hit enter. Leave me alone. And it goes happy hour. Right? Why does implied volatility move inverse to the market? A summer filled with volatility. Everything, okay, is searchable. Everything is searchable in here. Next thing, this is the class archive. Do you want option classes? Do you want technical analysis, day trading classes, trend trading classes, hedging strategies for your portfolio, classes on futures, stocks, pairs, mindset? Okay, you name it. You want to know what option strategy classes we have in here? There, scroll down. The next big short. Beginner's Guide to Ratio Butterflies, Option Greeks. You name a topic. Here it is. How to collect income being short. This is the class. This is what we were talking about tonight. This is what you're kind of here for. By the way, it's about to play. You're going to click here. You're going to download the slide deck. This thing it's huge. Okay? This is where you want to sign up for it right here. Again, I'm going to throw up the address and I'm going to answer all the questions I possibly can. Right? Everything. You get access to everything. It's TheoTrade.com/TomTomSam. TheoTrade.com/TomTomSam. If you need us on the phone, you need to email us. It's right up here. Again, it's $297. I want to make that clear. It's for the entire quarter. Now, I'm going to answer as many questions as I possibly can. All right, let's get to it. By the way, yes, we do quarterly. We do quarterly memberships here. Okay, so one of the first things I want to cover. Well, somebody said it's a subscription for $297 for 3 months. Can I cancel any time? Yes, you do sign up quarterly though. What happens after the 3 months is up? You pay another $297 if you want to be in TheoTrade. Listen, I'm going to tell you right now, people come here and they're like, you can binge watch all you want. I actually encourage it. When I say binge watch, just like you do on Netflix. You get on Netflix and you're like, I just watched the entire series, okay? And I did it in like 3 days and I can't see anymore, but you guys get what I'm saying? You can binge watch everything you want. I don't care. All right? Do you know that last month, and I wish I could show this statistic, there were 7 million minutes of TheoTrade video consumed in 1 month. 7 million minutes. It's awesome. Okay, I love it. I don't care what it costs in bandwidth. I think it's awesome. You subscribe for 3 months, $297. You want to continue after that? Awesome. You can cancel. All right, just shoot us an email. All right, you can stop anytime. We're right here. We're not hiding from anybody. Next question. I can't get approved for options because I'm new. We will help you get approved for options. TD Ameritrade, E-Trade, Tastyworks. We can help you. Again, we can help you get approved for options. Okay. Can you do these trades in your IRA? Absolutely. The stuff that we talk about here at TheoTrade, you can do in your IRA. In fact, on a day-to-day basis, I'm now trading in my IRA. Hope you guys don't mind. I'm getting more mature. I want to trade my IRA. Okay. And somebody said, I can't make any of this stuff live. Are the classes recorded? Maybe you're overseas. Everything is recorded. Every trading session. Listen, I know, by the way, yeah, you could do it in a Roth IRA too. I know that you can't make it live. Like nobody can sit there for 6 hours a day. But we do it and we don't charge you more. If you want to watch 6 hours a day, watch it. Okay, I don't want to make you feel like you're missing something. Do you realize at $297 a month, it's worth it just for a coaching session. It's worth it just for the classes. It's worth it if you just wanted to do an indicator. Okay, it's worth it all day long. We give trade ideas that we email out. How is that not worth it? Everything we do, email support. Do you think it's worth $100 a month to be able to email me? Okay, I don't know. I only spent 15 years in the brokerage world, 5 years in the professional trading world. Okay, and that's just me. We have 6 other full-time instructors. I don't have the answer to everything. All right. I mean, listen, we are stacked in terms of capacity of these instructors. Professor of finance at Loyola. All right. He moonlights at Loyola. This is his real full-time job. Next thing. F, you're new to options? Again, we have that start here menu. Don't even worry about it. We will take you through. Oh, next question that came up. Can I access Don in the future? Sure. Just go right here. Support at TheoTrade. I know that seems like so impersonal. Okay. The support at TheoTrade address, though, it is like what we call a common inbox. We all see it. Meaning everybody here at TheoTrade, we share one giant inbox. Okay. I love it. Can you reach the other instructors at TheoTrade? Yeah, just same thing. Support at TheoTrade. You know, if you want to talk to Matt, okay, Matt, talk to Matt. Say, I want to talk to Matt. Good. Talk to Jeff. You want to talk to Jeff? Fantastic. Okay. By the way, Jeff, you know, in his other job, they charge $45,000 a semester to see Jeff in a class at Loyola. Here, you know, $297 for 3 months. I put a lot into that. The fact that, again, you have a professor of finance that's actually teaching here. Somebody's asking, how much time does it take to learn to get short and sell premium? You know what? If you understand the basics of options, you can go through this class in 3 hours and literally come out of the other side and be able to do this. This is not that hard of a class. Somebody was asking about technical analysis. If you need more help in technicals, I would suggest Corey Rosenblum. Okay, Corey Rosenblum, awesome. Jeff Bierman, unbelievable. Again, Jeff came up with a lot of the studies that are on the Thinkorswim platform. So, absolutely. So, all right. How do I get started? Oh, how you get started? Just go to theotrade.com/TomTomSam. All right. Let's yeah, by the way, we'll help you get options access, of course, to TD Ameritrade. Been there forever. Okay. Somebody said, can you show me some of the complex classes you offer? Patrick, I'm going to tell you right now, buddy, we get deep here. You want a complex class? Okay. go for the fruit fly. You want a complex class? Selling options for a living. It doesn't get more complicated than that one. Okay, option Greeks. And you really want to get crazy, check out tetrapod spreads. Tetrapod spreads is actually teaching how to do dispersion on a retail level. So I'm telling you right now, the rabbit hole can get deep over here. It's how deep you want to go. We'll take you that far. Several of us actually worked in some really deep areas of the industry. And, you know, my expertise, volatility arbitrage. So we'll take you that deep. No problem whatsoever. Scrolling back over here because I'm trying to hit almost every single question before I let you guys go. By the way, you know what? Somebody was asking, like, what's the difference between TheoTrade and some other classes out there? I'm going to tell you right now. How about this? The material that we provide over here, okay, has got the depth and experience of instructors that have a minimum of 15 years of experience, okay? The material here, we don't do a la carte. We don't sell you a class for $500, charge you $1,000 to do this and $1,000 to do that. It's everything. It's $297. We try to make this fair and equitable for everybody. Okay? Why do we do it? Well, look, we have just shy of 4,000 clients. That's why we do it. Okay? And you know what? These clients are the most successful in this industry. And that's what's important to us. The only way, okay, the only way to make this work is you people need to be successful. You need to remember that. With that, I'm going to sign off tonight. I'm going to try to type in a couple of answers to some questions in here. Again, this is TheoTrade.com/TomTomSam. It's $297 for the quarter. See you guys tomorrow morning. By the way, yeah, I'll be live tomorrow morning right at the market open. Feel free to join us in the chat room if you guys do have the time. Thanks, everybody. Have a wonderful evening. Bye-bye.